Warren Buffett said, risks come from not knowing what you're doing. So let me guess. You have heard about DSCR loan and someone made it sound like a cheat code. There's no income verification. There's no tax return. Just buy the property and let the tenants, let the rent just qualify you. And you're thinking, is this real? Or is this one of those things that sound good until you sign the paperwork and you realize you're just screwed? Well, in the next few minutes, I'm going to break down DSCR loan in plain English, how they work, what lenders actually look at, what can go wrong, and help you decide if DSCR loan is a right or a smart choice for you. This video is sponsored by Zachava. More on that later. Let's get into it. Here's why DSCR loans are a big topic right now. A lot of people want to buy investment properties, but their financial life doesn't fit directly into a box. So maybe you're self-employed, maybe you're a 1099 realtor like myself, maybe you're a business owner, or maybe you're someone with just a strong cash flow but low tax returns. Or maybe you're relocating to South Florida and thinking about buying your first rental. So DSCR loans exist because lenders sometimes say, instead of qualifying you based on your personal income, let's qualify the property, the one that you're trying to get. Let's see if that qualified you, and let's see if that property, the mortgage of that property, or what you get in that property can cover the mortgage. But here's the catch. DSCR loans are usually more expensive than conventional loans. So today, my aim is that you have a clear understanding of this financial tool. And that's what it is, a financial tool. Let's start with this breakdown. DSCR stands for debt service coverage ratio. It's a ratio that compares the property's income to the property's monthly debt payments. In plain, what does that mean? It simply means this. Does the property make enough money to cover the mortgage? That's it. Does the property make enough money to cover the mortgage? That's all. That's all they really want to know about. So the DSCR loan does have thresholds that lenders want to cover. Let me tell you the DSCR thresholds that lenders really care about. Most programs want a DSCR around 1.0 or higher. And better terms often show up when you're around 1.2 to 1.25. So let me translate what that actually means. A DSCR of 1.0 means that the property's income equals to the payments. A DSCR 1.25 means that the property makes 25% more than the payments. And yes, some programs may allow lower, but usually with trade-offs like bigger down payments, higher interest rates, a stronger reserve, or just stricter property rules. So here's where most people get surprised. The payment sometimes is bigger than what people expect. Many lenders, they look at the full housing payment, including the principal and interest. They look at taxes, they look at insurance, they look at HOA if that's applicable. So the rent covers my mortgage idea only works if you're counting the full reality. So when people say the rent covers my mortgage, they should really be asking, does the rent cover all of it? The whole thing. So let's keep the math simple. Let's say you buy a property and the market rent is $3,200 per month. And the full housing payment on that property is $2,900 per month. So you calculate the DSCR like this. You take the $3,200 divided by the $2,900 and you get 1.1. That works for many lenders. That's above a 1.0. It's not amazing, but it's workable in many cases. But now, watch what happens if the insurance increases and the payment becomes $3,200. That means that your DSCR is $3,200 divided by 3,200, which equals 1.0. It's still possible, it's tighter, but now imagine that the rent drops and now it's 3,000. So that means that you have a DSCR of 3,000 divided by 3,200, so it's at 0.94. Same property, very different conversation. That may still be possible with some lenders, but it's not the same deal anymore. Because DSCR loans are often non-QM, meaning non-qualified mortgages. The guidelines vary lender by lender, but most commonly, you see patterns like this. You need a down payment of around 20 to 25%. Sometimes you need a minimum credit score, often around mid 600s, and of course that varies. The DSCR minimum often has to be near that 1.0 that we talked about, with better pricing as the DSCR rises, as shown in the table here. In this table, you see how the down payment ranges between 20 and 25%. Sometimes you could find them at 15%. Depending on the company, I guess everything can change, and depending on what interest rate, depending on what the market is doing. But if you get a 1.0 or better, 1.25 or better, then things really change, because that means that the property and the odds of the property being at risk just gets lower. So the better you get that DSCR, the better chances you have of getting a mortgage. We can also compare the DSCR loans versus conventional loans. What's the difference between them? And you have to understand that DSCR is not better than conventional loans. It's just a different tool. It's just a different option for some people that might work better. So you do have to compare them. Conventional loans often have lower interest rates, they're more standardized rules, and they're heavier on personal income and the documentation that is required for that. Where in the other side, DSCR loans often have just an easier income documentation because it focuses primarily on the property. Of course, they also comes with higher rates and sometimes fees or prepayment and penalties that you just have to watch out for. A little upgrade can change how you walk into every room. And today's sponsor makes that easier than ever. Friends, before we jump back into the video, I want to say thank you to today's sponsor, Zachava. If you love high quality style, and believe me, I do, if you like clean designs, and if you like luxury pieces without luxury prices, this is going to be your new favorite store. As a professional realtor, presentation matters to me. The way you show up just sets the tone. And Zachava offers that perfect blend of class and affordability. From designer jackets and sunglasses to premium handbags, fragrances, dress shoes, watches, and accessories, it's all there. It's the kind of style that makes you feel ready for the interview. It makes you feel ready for that business meeting or the boardroom, or just, you want to hang out at night with the family. And here's the good part. They gave my viewers a special discount. Take an additional 10% off when you check out using my code, because people matter. Or even easier, click on the link in the description below or scan the QR code that is on the screen, and the discount will be applied automatically at checkout. So if you have been wanting to elevate your wardrobe, maybe 2026 is the year for you, and you want to have something meaningful, you want to feel good and look good, check out Zachava. You won't regret it. Upgrade your look without breaking the bank. Now, let's get back to the video. It is also important to think about what most people don't think about. This is important, so don't miss this. As we talked about conventional, as we talk about DSCR loan, smart investors are just wise investors. So these are 4 mistakes that you need to avoid if you're considering a DSCR loan. The first mistake you have to avoid is assuming that today's rent is guaranteed. Rents can change. Vacancies happens all the time. A property that works on paper can feel different if it sits vacant for 45 days, if the tenant pays late, if you need a surprise repair, Again, most tenants are great, some can ruin your life. Mistake number 2 is just ignoring the ownership costs. Even if a lender uses rent and payment, remember this, as an investor, you still have to pay for the repairs of the property, and they will happen. You still have to pay for the maintenance. You still have to think about the CapEx, and the roof and AC and appliances. You have to think about property management or maybe leasing fees. You have to think about the taxes that can rise over time. And of course, sometimes in Florida, that is known to happen. DSCR tells you if the property can't cover the mortgage, not everything else. So, it doesn't guarantee a stress-free life. You have to make sure of that. Mistake number 3, just not asking about prepayment penalties. Read the fine line. You have to make sure when you get into these loans that you're around people that can guide you properly. Some DSCR products may include a prepayment penalty structure, and you need to ask those questions because that matters if your plan is to refinance the property or to sell quickly or just pay down aggressively. So before you sign anything, ask, is there a prepay penalty? How long? And what's the cost? Mistake number 4, focusing only on approval and not on resilience. The goal is not just to qualify, the goal is a property that can survive. What do you need to survive? Higher insurance, slower rental season, HOA changes if you have any, unexpected repairs, and you still need to sleep at night knowing that your investment, that you made a smart investment, not a stressful one. One principle that guides how I approach real estate and the decisions that I make in real estate is this. The wisdom of the prudent is to give thought to their ways, found in Proverbs 18:4. Not every deal that qualifies is a deal that makes sense. Wisdom means slowing down, just slow enough to understand what you're stepping into. This is important. So if you're considering a DSCR loan, wisdom looks like this. You have to think through the numbers, not just the approval. Remember, the banks are looking out for themselves, not really for you, so be careful. So you need to stress test the payment before life does, before stuff breaks. You have to choose a structure that supports long-term stewardship, not just short-term pressure. This isn't about rushing into ownership. It's about making decisions you can live with, that you can live with peacefully. So as I'm beginning to do, I want to give you some actionable takeaways. In other words, let's wrap this up, and I want to give you 5 takeaways that you can use if you're considering this tool. First one, DSCR loan qualifies the property more than the person. So it's not about you, it is about the property. A DSCR of 1.0 is the edge, right? 1.25 is the cushion, that's another 25%. If you can get it higher, even better. The third one is you need to use the full monthly payment when you do your own math, and that's important. 4, expect trade-off. A DSCR often means higher rates, higher than conventional loans, at least. So you need to ask about, this is number 5, what the silent killers are. Vacancies, repairs, reserves, and prepayment penalties. So here's the truth. A DSCR loan can be a powerful tool if the deal is solid and the plan is wise. If it's solid, if it's wise, go for it. Investing is a great opportunity to build wealth. But if the numbers only work when everything is perfect, that's not investing. That's hoping. That's hoping that you get lucky. You don't want to do that with math. You don't want to do that in real estate. You don't want to do that in investing. Informed decisions create peace. And peace is priceless. That's really what you want. If you want to go deeper and watch my next video, I did a video on how to analyze a rental property here in South Florida, but really pretty much anywhere else. I recommend that you go watch it. Because DSCR is just one piece. Analyzing the whole game, like I talked about in that video, that's the whole game. You really want to know the entire picture. And if you haven't made it this far, I just want to say thank you. Thank you for giving me your time, your attention, and your trust. My goal is to grow this channel, yes, but just to make real estate simple, to make things clear, and give you just an ability to just make informed decisions about real estate. Without pressure, without fear, without confusion, just straightforward information as you need it. So whether you're buying your first home, whether you're investing, or just trying to understand your options, I want you to feel equipped and confident, not rush. So if this video brought any kind of clarity and I help you in any kind of way, I would appreciate if you subscribe to the channel. It helps my message reach more people. It really truly helps me as well. Hopefully it helps other people make wise decisions as well, just like you'd have by watching this whole video. I also would like to hear from you, so drop a comment below. The algorithm loves that as well. So let me know, where are you in your real estate journey? What topics would you like me to break down in just simple English for you to understand, with no car flying, some bombs, and too many video woulda. I don't know, that's what I call them. I just want to be simple. I just want to be clear. If you'd like to continue this conversation one-on-one, I also have my information linked below. Thank you again for your support. Thank you for being part of my community. And remember, as always, God loves you, and so do I. See you in the next video. Bye.